Welcome to our discussion on why dividend stocks matter. Dividend stocks offer a unique approach to growing your money. They represent ownership in companies that share profits with shareholders. Imagine receiving a thank you payment just for owning a piece of a company. These payments, known as dividends, provide a steady stream of income. Unlike stock price fluctuations, dividends offer stability. Companies like Coca-Cola have a long history of paying dividends. Dividend stocks add an extra layer of returns to your portfolio. In Section 2, Unpacking Dividend Stocks. From basics to blue chips, we delve into what it really means when you buy a dividend stock. You're buying a share of ownership in a company. As a shareholder, you're entitled to a portion of the company's profits. These profits are distributed as dividends. Some companies offer dividend reinvestment plans or DRIPs. DRIPs allow you to reinvest your dividends into more shares. This can accelerate your wealth building. Blue chip companies are often favored by dividend investors. These are large, well-established corporations with stable earnings and dividends. Think of companies like Procter & Gamble, 3M, or PepsiCo.
In Section 3, the dividend calendar. Key dates and tax implications, we explore the essential dates every dividend investor should know. Investing in dividend stocks requires understanding a few key dates. The declaration date is when the company's board of directors announces the dividend amount and payment date. The ex-dividend date is crucial. To receive the upcoming dividend, you must buy the stock before this date. After the ex-dividend date comes the record date. This is when the company identifies all shareholders eligible to receive the dividend. Finally, the payment date is when the dividend is paid out to shareholders. Taxes on dividends are an important consideration. In the United States, qualified dividends are taxed at a lower rate than ordinary income. Non-qualified dividends, such as those from REITs, are taxed as ordinary income. It's essential to consult with a tax professional for personalized advice. They can help you understand the tax implications of dividend income based on your individual circumstances.
Dividend yield, a measure of investment income. Dividend yield is a key metric for evaluating dividend stocks. It represents the annual dividend payment per share as a percentage of the stock's current market price. For example, if a stock pays an annual dividend of $2 and trades at $50, its dividend yield is 4%. A higher dividend yield may seem attractive, but it's not always a guarantee of a good investment. Sometimes an unusually high yield can be a red flag. It might indicate that the company's stock price has declined, pushing the yield higher. Conversely, a lower dividend yield doesn't necessarily mean a stock is a poor investment. Companies with strong growth potential may have lower yields because they reinvest a larger portion of their profits back into the business. Dividend yield is just one factor to consider when evaluating dividend stocks. It's crucial to look at the company's overall financial health, dividend payment history, and future growth prospects.
Choosing wisely. Navigating the dividend stock landscape. Selecting the right dividend stocks requires careful consideration. Start by researching companies with a solid track record of dividend payments. Look for companies that have increased their dividends consistently over time. Pay attention to the payout ratio, which is the percentage of earnings paid out as dividends. A sustainable payout ratio indicates that the company can comfortably afford its dividend payments. Avoid companies with excessively high payout ratios, as they may be at risk of cutting dividends. Diversification is key to managing risk in any investment portfolio, including dividend stocks. Don't put all your eggs in one basket. Instead, spread your investments across different sectors and industries. Consider using dividend ETFs or mutual funds if you prefer a more hands-off approach. These funds invest in a diversified basket of dividend-paying stocks, providing instant diversification.
Your dividend journey resources for further exploration. Investing in dividend stocks can be a rewarding journey. It's a strategy that aligns with the principles of long-term investing and building wealth gradually. To deepen your understanding, explore reputable financial websites and publications. Websites like Seeking Alpha, Morningstar, and Yahoo Finance provide valuable information on dividend stocks. You can find dividend histories, payout ratios, and analyst ratings. Reading investment books and articles can further enhance your knowledge. Remember, investing always carries some level of risk. Past performance is not indicative of future results. Before making any investment decisions, conduct thorough research and consult with a qualified financial advisor. Dividend stocks can be a valuable tool for achieving your financial goals. By understanding the fundamentals and following a disciplined approach, you can navigate the world of dividend investing with confidence.
Thank you.